So for Brent, we're looking at 90.
90.
And for WTI, closer to 80.
And what gets you there, and what do you think of the move down this way? I mean, it's a tiny little move this week.
I mean, we are definitely seeing quite large intraday moves for the last few weeks, and we'll probably see that going into the Iranian sanctions. For sure, the main reason for us to have a bullish outlook now is very strongly pivoted around the Iranian sanctions. It's really Iran that is going to cause supply shock. Has market priced in yet? Maybe not.
What do you think the Saudis ultimately do? I'm actually headed to Riyadh in 2 weeks, and clearly the relationship between the U.S. and Saudi has been good, but has been somewhat dependent on this very issue.
Yeah. It is difficult to see because right now we are expecting Saudis to bridge that gap. Do they have the spare capacity? We look at spare capacity from, let's say, more all theoretical perspective. They have around 1.3 to 1.4 million barrels per day. Do they have that available right now? I think there's a big question mark around it because maybe in 9 months' time, a large proportion of that will be ready. But right now, right away, we have already heard they had some issues with 2 of their fields coming online, Manifa and Corrales. So I think the market's a bit skeptical. Can they hit that additional oil if Iran was to be taken out down below 1 million?
How sustainable are these numbers? And the reason I ask is because if they are sustainable, you're going to see a lot more people try to come online.
Sure. I mean, you're looking at U.S. producers coming online. These numbers are sustainable. I would say we're looking at next 3 to 6 months. So that's where the confluence of factors leads us into believing about much more bullish market. Because we're looking at Iran going out. We're looking at potentially refiners coming online from their seasonal maintenance going towards the end of the year. We're also looking at potentially U.S. production growth. Year on year, slowing down.
But you're only projecting out 3 to 6 months. I'm thinking more 2 to 3 years.
Sure.
In terms of what kind of production comes online, what that means for jobs on one end, meantime, and whether the price comes down, or if the price actually stays this high, at some point does this become actually a bad thing for the equity market and for the economy?
In the next 1 to 2 years, for sure, what we're going to see is the higher oil prices will incentivize more U.S. production, as we are seeing. But right now, of course, pipeline constraints stops that. But as you move beyond towards the end of 19, you will most definitely see U.S. producers incentivized to bring more of their uncompleted wells online. Does that mean that oil prices come down? No, I think we have room to absorb more U.S. oil, given the lack of investments globally that we have had in the last 3 years, as long as demand growth doesn't fall off the cliff going into 2020.